You've heard the news, 2021 loan limits have increased again. But what are the potential impacts?
Click on the banner above to learn more about our sponsor, Fairway Independent Mortgage.
Welcome back, everyone. Mortgagee Letter 2020-42 announced new loan limits for 2021. And once again, federally insured reverse mortgages for the fifth year in a row will see their maximum claim amount significantly increased. HECMs that have a case number that's assigned on or after January 1st are eligible for the new national lending limit of $822,375. But wait, you may say, didn't HUD echo the Trump administration's call to Congress to abandon a national limit in favor of going back to county or lending limits that are regional? Yes, in fact, they did, but remember the operative word, Congress. Neither FHA or HUD can unilaterally change the present loan limit scheme. Rather, it's a legislative process that requires congressional approval. Now, today we're going to examine three questions. First, who stands to benefit the most? Second, what role could the geographic concentrations of HECMs in the U.S. play in the future? And third, will jumbo and proprietary loans suffer as a result? Now, first, if you originate HECM loans along our nation's coastline, then congratulations. You're the one that's most likely to find those eligible homeowners that have a higher home value. In fact, they stand now to have an additional $55,000 plus of their home's value considered in the calculation of the principal limit. Let's put numbers on that. That would mean a 70-year-old borrower with a home appraised at $850,000 and a 3.25% effective interest rate, they would have a gross principal limit of over $468,000 versus $436,000 in 2019. That's an increase of over $32,000. And it could incentivize a homeowner in an urban or high-valued market who wanted to access more of their home's value to take out a federally insured version of the reverse mortgage in 2020, where they decided to wait in 2019. However, within hours of FHA's announcement, HUD issued a formal press release and it questioned the wisdom of increasing the maximum claim amount. Now, while FHA is mandated under the National Housing Act to set the lending limit based on 115% of an area median home value, and that's based on the Metropolitan Statistical Area, or MSA, and county, HUD still expressed their concerns, saying, FHA has seen consistent increases in loan limits during the past few years, putting it in a position to serve a segment of borrowers that may be better served by the conventional market. FHA's mission is to support low to moderate income borrowers, so why does the law permit FHA to insure mortgages up to $822,375? This is a question for Congress and the taxpayers who stand behind FHA to answer. And those folks were the words of FHA Commissioner Dana Wade. So she's asking a very pointed question. Now, let's clarify first for a minute. While the mission of FHA is certainly to assist the low and moderate income borrower to get a loan, the HECM statute itself actually makes no reference to income or level of wealth. Next, geographic concentration, with 60% of HECM loans or claim amounts originating from just 5 states. Will that increase the likelihood of more claims against FHA's insurance fund? It certainly could. Now, FHA's most recent report to Congress noted that California alone accounts for 25%, or 1/4, of the total maximum claim amounts issued in HECM loans in fiscal year 2020. Core Logic, by the way, noted in August that 3.8% of home loans in California are seriously delinquent. That's over 90 days overdue, and that's a 6-fold increase from 0.6% a year earlier. So if those loans result in a wave of foreclosures in 2021, values could drop appreciably. Florida, Colorado, Arizona, and Washington State, they account for the aggregate 35% of total HECM loans in claim amounts in 2020. So what about the private reverse mortgages? The third question, the proprietary or jumbos. Now, the good news is those markets should not be unduly impacted. The potential owners in a high-valued property are typically focusing on tapping into more of their home's value, getting a substantially larger sum of money in loan proceeds, more so than the consideration of the HECM's unique features and benefits. So what are your thoughts on this most recent lending limit increase? Do you approve or disapprove? And what are the benefits or the impacts that you would anticipate in 2021 and beyond? We want your opinion, so please leave your comment below. And you can share this video with other reverse mortgage professionals. You can do that by using the social media links found on this page. Be sure to return next week for more reverse mortgage news, commentary, and analysis here at HECM World. Don't forget, our most recent podcast came out just today. In fact, it comes out every Monday, so be sure to go to iTunes or here at HECM World if you're not there already, and you can go ahead and find our most recent podcast, get your news on the go, very efficient, our top reverse mortgage news stories. Have a great week, and we'll see you soon.